We live in a very fascinating time within the E&P industry and the traditional upstream space today. Many CEOs of E&P companies might not say fascinating, they might just say challenging. But when we look at the lay of the land right now, we see oil and gas companies trying to balance their portfolios in terms of how much do they invest in the current traditional exploration space versus beginning now to invest in non-fossil fuel renewable industries. And this is because we have an energy transition pathway that we are on. There's quite a bit of pressure on oil and gas companies. We know that the energy industry as a whole has been very much out of favor from an investment standpoint. It's probably the worst performing sector within something like the S&P 500 over the last 10 years. It's quite unusual. But still, there's quite a bit of value in this space. The returns within upstream for exploration companies has traditionally been excellent. And I think with the efficiencies that oil and gas companies have brought to their business, that continues. And one of the things we see is they have become more specialized and focused on particular regions or play types. Success rates have come up and they've been quite good. So the business itself remains solid. The challenge is really how much do you want to put into upstream exploration? How much investment do you want to make in these other things? What we've seen from the companies, typically the larger companies that have made investments in renewables and clean tech, it seems early and it seems a bit random. So most of those companies are testing and they're picking up a small company here or there that's got a new technology in a renewable space, for instance. But it feels as if we're not quite sure where that space is going to go ultimately. So at this point, it's a fairly broad, diverse approach to that, which is fine. But in the meantime, global energy demand is increasing. The mix of that energy demand will change 10, 15 years out. We do think that demand for oil as an energy source will start to flatten and decline in that time. But energy demand will still continue to grow. So that means that companies are still going to have to invest. We're going to need more traditional fossil fuels, certainly for this initial period. And something else to keep in mind is when we model out energy demand and energy mix, 30 years out from now, we still see renewable energy sources making up only maybe a quarter of the overall energy demand. So we're still going to have a huge need to produce oil for some period of time, gas, and other fossil fuels. So I think the industry has quite a positive outlook, even though it is in one of its more challenging times ever. There is absolutely hope. I would say that the upstream oil and gas industry is working in many respects better than it ever has. The implementation of new technologies, digital transformation, agility. We see success rates higher than they have ever been before. I think technologies we aren't aware of yet that are coming. The advent of really large data sets with multiple factors. All of this is driving the industry today to work faster and much more efficiently. We've already seen costs of finding oil come down significantly with a new focus. So I think there's many positives that are surrounding the upstream industry today.